Good morning, this is Mayor Valensky with Driving Markets. So, Speaker of the House, Kevin McCarthy, and Majority Leader Chuck Schumer will be meeting with Joe Biden today on the assumption that Joe Biden is awake and aware of what's going on. The meeting is regarding the US debt ceiling. They've reached the debt ceiling, which means they can't issue any more debt. What's debt? They can't issue any more bonds or any more US treasuries, and that is the funding needed in order to run the United States of America. Now, once they've reached the debt ceiling and they can't issue any more bonds, effectively there'll be a shutdown of government offices and shutdown of the US economy across the board. Because issuing of bonds, which is putting money in from capital markets, is what is needed in order to run the US economy. We'll come back to that in a second. Now, they have a debt to pay regarding the issues of the bonds on interest of around about $650 billion US. Some people are saying it's a lot more than that. Some people are saying it's going to be 800 billion, 850 billion, because the tax receipts received this year are less than the tax receipts received last year. Therefore, there is not enough money within the US Treasury to pay the debt in any case. So they have to increase the debt ceiling. Janet Yellen wrote to policymakers and stated quite simple that if the debt ceiling is not increased, she wrote last week, if the debt ceiling is not increased by the 1st of June, effectively the US could default on its interest payments. If the US was to default on its interest payments, that would downgrade immediately the US as far as a solid AAA economy that could be relied upon to pay its interest when issuing debt. If the US is downgraded, then not only would it be more expensive or more difficult for the US to pull in money from international capital markets, it will also send the dollar crashing and will send stock markets and equity markets crashing as well. Okay, so let's just go over that again. If the US fails to pay the interest on its debt by the beginning of June, according to Janet Yellen, then it's going to be in serious economic trouble. I will say follow that on with a crash in the dollar and a crash in equity markets. Something not seen since 1929. Now, at the moment, the members of the House are going along to see Joe Biden. And they're going to raise that debt ceiling. At the moment, it's running at $31.6 trillion. They'll need to increase that significantly. Now, the debt in the last 10 years has doubled as far as the US is concerned. And that is a major, major concern. With the increase in debt and no particular way of repaying that debt, then you could see the debt within the next 10 years at 62 or 64 trillion dollars. Because if it's doubling every 10 years, then this problem is going to get bigger and bigger and bigger. And that's why inflation is good in this particular case, because inflation devalues debt. Inflation makes debt lower in real terms, which would be the get out clause or the get out card as far as the US government is concerned. So US debt ceiling is now absolutely top number one priority. Remember, the debt ceiling was introduced in 1917 with the Second Liberty Act, which allowed the US to borrow money, issue bonds that they could therefore fund the US economy. So the debt ceiling is the topic of the day, and the debt ceiling is going to be the topic of the day all the way through to the beginning of June, unless a solution is found before that. We are looking at a major recession, or we are in a major recession, whatever the case is. Now, this major recession is only going to get worse. It's not going to get better. As it deepens, then you're going to see further cataclysmic collapses in stock markets, in equity prices, and across the board in other asset classes. Yesterday, Bitcoin fell significantly because their Binance tweeted on Sunday that there's congestion in their system, and Bitcoin fell around about $950. If that congestion continues, which I don't believe it will, so that's my opinion, I don't believe it will, then you could see Bitcoin testing the 25,000 level. Only if it falls below 25,000, then is a concern that will fall further down to 19,000. If it doesn't fall below 25,000, the probability is it'll pick up and go back up to 30 and surpass the 30,000 level. US dollar was slightly stronger yesterday. However, the overall trend on the US dollar is down. So keep an eye on that because the US dollar is going down. One of my most favored colleagues and fans, Phil, stated that we should be buying, looking at petroleum companies and looking at oil companies as an investment. The reason being, he stated, which I want to repeat, is that the use of oil is static. It's not moving down. We're still using the same amount of oil for all energies. Everything to do with the economy, oil is being used. And the chance of these petroleum companies going down is small. And he said to me specifically that the likelihood is that they're going to go up. So those of you who are looking for equities or looking to invest in a particular area, then thank you, Phil. I'd like to say that you can look at petroleum companies specifically and you'll see that the PEs are low and the dividends are high, probably an opportunity to get stuck in there. So I thought I'd mention that on Driving Markets as credit to Phil. Moving on to other aspects this week, so you've got inflation numbers out tomorrow, Wednesday, and on Thursday. Market is on hold, effectively waiting for those inflation numbers. I see inflation ticking up. I don't see inflation ticking down, and therefore that's going to put the Fed into a bigger dilemma. Apart from the debt ceiling, they're going to have a dilemma of a rising inflation and limited in what they can do regarding interest rates. This is Mayor Walensky with Driving Markets. You can share, subscribe, follow me on YouTube, follow me on Instagram, and follow me on TikTok. And I'm more than happy to help, comment. Speak to you soon.